Hey everybody, DayTraderRockStar here, and high probability watch list for the week of, drum roll please, it'll be 28th, I believe. That's 28th. Yes, it's going to be August 28th, the last week of August. Really the last week of, the kind of the official summer, right? Coming up to that, the end of summer. I can't believe how fast it went. But lots to talk about. I'm officially back from vacation. That it was both a great experience, and I always hate being away from the markets for too long, but I tried to stay in touch out there. I got a watch list out at the time out in Oregon, so the last watch list had a lot of good information on it, and the let me see what my main mix is. I want to turn down my headphones there. It was really just kind of overall cautious in the markets. So now we're back. I want to go over some things with you. I think it's very important. I talked about it a lot on the radio today. So if you listen to it, you're probably going to hear that over again. But I want to, of course, this is the HPS, the first part of the HPS watch list. The first part is a general overview of the markets, and I usually send this out to a lot of different zones, but then we save the second half for the setups going into the week for the members of Day Trading Radio. So consider a membership if you're not a member yet, please. So the first thing I want to announce is that the HPS watch list, normally you go to the dashboard, and it's up on the dashboard. It's right up here, HPS video. You click on that, and this is last week's watch list. It's very clean. You have archived watch list here. So I've been using that, but it's an old style compression I'm using for this, and it'll be easier for me to actually record this with some more updated technology. And we're moving the HPS watch list. It's going to be still on your dashboard, just moving it over a tab. So if I go back here, if you go back to the dashboard, the HPS watch list goes with the HPS site. So right now, this is the HPS video. I want to switch that over. Right now, you just have to go to the HPS list. Click on the list. It'll bring you to the HPS site. And up here, you'll see HPS watch list video. And you click on the watch list video, and it'll be the latest video up there. And you can actually scroll back and see all the previous videos also. So it's a different way of just accessing. Nothing else is changing on it. Just to be easier for me to update it going forward. Cutting out a couple steps and making it a little bit easier, and we're making the HPS site a little bit more just better overall. We're adding some stuff to it. I want to add the videos to it. I want everything to be in that HPS folder. Alright, so that's going forward. So that's where you'll find this video. Go up on your dashboard, go to the HPS list, and then go to the HPS video. And I'll try to change that tab so it just points to it, so you don't have to worry about it. So we're going to start off by just kind of touching base with last week's watch list, and I was very cautious. I said, I think it's a good time to really apply a hedge to any long positions. There's just a kind of a rumbling, nothing that you could really predict, and I don't think anybody could predict when the market's going to take a real big pullback or take off or doing anything, but we are able to read signs and on a short-term scale really be able to trade it effectively for profit. But calling day-by-day action is a little bit harder. What day is going to be that. But everything on this chart, everything from the beginning sell divergence that we had, and again, our divergence is our number one setup. We had a perfect sell divergence here, and from that point the market has moved down quite a bit, 400 points off the Dow high. And it continues to, come down, bounce, push up here. At that point, when we had these three pivots, we had what was called a 1-2-3 pattern. And at 1, 2, 3, you need two pivots or 2 points on one side to make a straight line, and the other one to just drop the parallel line. And we usually trade 4, 5, and 6 if it is. And read in the stochastics as the price adjusts, gives us the opportunity or the clue to when the bigger move is going to come and what direction that's going to come. So all of it comes together with the HPS methodology, just about letting it set up. Right now, you did see, your trade opportunity was here for a bounce. We looked for a bounce back up to the trend line. We got a little through it, right up to the 20-period moving average, and then started pulling back again. All along, we continue to make a series of lower highs on the stochastics. And that's more of that negative long-term signal. So, you know, we did get a move back up. We're having a hard time with that 20-period moving average. We're not really turning back up aggressively. And there's rumblings out there. Now, like I said, I discussed this a lot on the show today. And personally, I feel that we have some downside coming. The other thing I want to add on is today we had a candlestick, a pretty decent, what we're going to call reversal. And a reversal candle, for our purposes, is a candle that takes out the previous high or low and then closes back into the pattern, and the tail should be twice as large, 2 times or larger than the body. Preferably, we like to take out as many days as possible to clear out, like down here, this little reversal here. That was considered a reversal candle, and we had a nice return on that. Up here was a reversal candle. We took out all the highs above us and reversed and closed higher, closed lower, and that was a real reversal. So we have that potential reversal here. We have the pop. It didn't take out this big candle here, but we got a couple pennies away from it. Almost enough to really call the double top divergence. And it's not even that we want a divergence here. It's not we're looking for one. The problem is here is that we actually held underneath that line and we reversed and we came back down. The reversal candle here was set up, you know, and we closed near the lows. Volume was picking up a little, but it was a Friday, and we have this kind of a coil there. So we don't know if there's going to be good news, bad news, what's going to trigger a move down or trigger a move up, but there's going to probably be something that does that. And that's just the name of the game right now. The one thing I always say is we could give you the best setups and understand where the market's going, but if news comes out, trumps everything. And excuse the pun. But it does trump everything, and any Trump news double trumps it. You know, you could do anything. So there's a lot of positives that are still to remain to be seen. You know, that comes with the new administration. You know, the promises, the tax reform, the healthcare reform. But there's now other things rumbling out there of talking about debt ceiling and shutting the government, and they're talking about the wall again. And there's you know, just a lot of conflict behind the scenes, and that just is that could turn into something more. We don't know. I mean, again, at this point, it is a guessing game. Everything on the chart tells me that we have a good shot of actually rotating lower. If there's good news, that cancels that and pushes higher. But as I see it, protection at this point is definitely worth the cost. Now this is a weekend. Monday opens up. Do we gap down, gap up Monday? Again, that's more of a gamble. We'll see what type of news comes out. If everything stays equal, everything's no news on either side, I do feel that this reversal candle, the lower highs here, and you know, just a lack of follow through. And underneath some major levels here, we had a retracement back up to the trend line and kind of holding underneath it, and some other things like that. So when we talk about hedging positions long, a hedge is something that counterweights what you have. One position, you go the opposite position. That way, if something happens and damages one side, you kind of hold and stay level. You know, you maybe gain something on the downside, as your longs might not gain or lose some money. It kind of keeps things even, while your overall purpose or overall objective is a higher move. So you want to hold on to those positions. That's one of the reasons. Or the other thing is just a clean table and just sit out the volatility here, which, you know, I don't think you should do as a trader, because that's what we come for. We come for the volatility. The short time frame trades that we're doing, during the day are textbook. They're perfect. These bigger moves are a little bit more difficult to time what candle's going to break down. Look, we're chopping around for 4 days here. Any type of good news is going to pop us. Any type of bad news is going to drop us. My guess is that a little bit more downside. So that's it. How do we act on that? Well, you could get many different ways. You could short individual stocks. You could short the futures. You could buy puts. You could, you know, do other combinations of things. So it's you know, right now I picked up some VIX calls. Now the VIX, the VIX is volatility index, and this is a hard one to trade. I'm not the biggest fan of this, but at the time, sorry. No. At the time, there it is. There we go. Just gonna get this is the underlying VIX, and it's a volatility index. It actually acts more as a a hedge for your longs. As fear comes into the market sells off. Usually get a spike in the VIX. Now this is the overall VIX, and the underlying the vehicles that you trade the VIX. There's many of them, different combinations, but I do the straight up the VXX. And the VXX, you're going to see it's not going to give you a right judgment of it because it just went through a reverse split, which doesn't really affect us that much, if we do get the move that we're going to get. But I'll explain some other things on it. So if you did, at this point, the VXX is 47.68 and change, and when you got calls, or if you bought that, it's a straight up reverse split. Just opposite as a real split. Like if you had Apple and they split, it would cut the price in half, but you would get double the amount of shares. So a reverse split would be the opposite. If you had 10 shares and they did 10 for 1 split, you would have 1 share left at 10 times the price. So that's what happened here. So they announced a 4 for 1 split on the VIX, and it's because it got underneath a certain price, and they do that, and they have the right to do that. And the way they rebalance your calls and stuff, if you do have the calls, it becomes pretty complicated. The way they did it, I even have to read up on it just to kind of figure out how they're pricing the calls, because you still have the same amount of calls, but the underlying shares are split up, and then you're also given. Let me actually read this so to be more clear to everyone out there what happens to the VIX calls and stuff. To say the Option Clearing Corporation put out a memo for the reverse split, adjusted the numbers of the VIX shares per option on a pre-split contract from 100 to 25. The option strike are not adjusted. An underlying symbol now option to trade against is the VXX2, a new symbol which is set at 25% of the VIX price. These contortions require that the holder are not left with any fractional contracts. All right. So there's a little complicated underlying way of calculating this and how they're balancing everything so you have the same price. The secondary, the VIX2, right? After the reverse split, your contracts are adjusted that each contract has 25 shares of the new reverse split VXX as deliverable. The strike price stays the same, and the effective price of the underlying that the option is priced as in the current VXX valued is divided by 4. So the value is the same. Still own the same amount of contracts. The way they calculate it is totally different, and the way if you exercised your shares, you wouldn't get the full shares. You would actually get a fraction of those shares. One quarter. Much easier now if you were going to restart a position and the VIX calls, everything's already taken care of. And again, it would still work the same way. If the market did do some kind of flush, there would probably be a nice reaction on the VXX, possibly up to 60. Do the calculation. That's a nice move. Not saying it would, but I mean, I'm saying that I've seen 10, 20% moves in the VIX in over a period of a day or two. And that's the hedge I am taking, feeling like there is something brewing. I haven't out until about October on the options, and very hard to time this. As you can see, each little pop has been dropped, and it continues to sink, and it will continue to sink. A trade in the VXX is such a short-term trade; it's almost a gamble. A protection. You feel something, maybe a long shot, but the value. is proportionate to what I'm holding. That it doesn't really, you know, if the market goes up, I'm going to make more money in my longs than I would lose if this just got blown out and didn't perform or just expired worthless. So, you know, I am leveraged to the upside, but willing to hold this. And I feel that the value here, at the time I got it, was, you know, worth it. Now we have the split and the readjustment, so it's a little bit different, but it still would react the same way. But the other way is the SPXU. As you can see, this is starting to move back up a little, pop to pull back. Basically the same type of setup. And when we talk about the downward channel in the S&P, and we talk about that you know, that lower high in the stochastics really causing that coil stochastic, we're seeing the opposite here on the VIX. We have a series of higher lows, which, as you know, when I talk about market trends and stuff, when you see a higher low scenario playing up, that is a sign of a longer trend developing. So we have this small little upward trend here starting to show up on the SPXU. And again, it makes sense because that's opposite of what the S&P is doing right now. We're off the lower trend line. We're up on the upper side of the trend line on the SPX, which is the S&P cash. We're up here on that top of the trend line. And on this one, we're on the bottom of the trend line. So we should pull back on the top, push up higher on this. You've seen this pattern a lot of times too. Now, if this was like Motorola or something like that, yeah, it seems like an easy, yeah, the trend has been. But this is the SPXU. This is the overall market conditions. And this is actually the short side of it. I mean, if this was the regular market, it would look great to go long here. So why not the SPXU? Well, the market has been a short crusher, you know. And, you know, when that starts to happen, you have to realize what side you want to be fighting for, you know. The shorts are not the easiest thing in this market. This is an opportunity maybe. It's a gamble, a little bit more higher risk, so go along with that. But I think there's an opportunity here. So we're on the top of a trend line, about to maybe roll over one more time. Here's the SPY. Another way of doing it is shorten the SPY. Any good news pops it. Any bad news drops it. Longer term, you know, we could trade this area down here. We could even trade a divergence that starts to pop up. We could trade news. But do you want to take a gamble right here for good news to pop it or to drop it? There's a little spot right now. All right, and with that said, we're going to start the second part of the video, the HPS watch list, which contains the setups for the week, best bet, and everything. I'll cut the video short here. The second part will be members. Like I said, please make your way over to DayTraderRockStar.com. Check out the 2-week free trial to see the type of research we send out. The nice HPS watch list, which is automated. You'll get the alerts, you'll get your emails, you get your text messages whenever our signals are hit, our trades are executed. Everything is automated, and you know, you get special privileges of being a member with your own dashboard and a bunch of things. You just got to check it out. All right, so with that said, I will continue this video for the members. There won't be any pause there, and we're going to go over some stocks right now. All right, the first thing we're probably going to do is go over the active HPS watch list, because there is a lot of motion on there. There was a lot of news out the past week. I was on vacation, so I haven't really been focused on them too much. Some of them I'm still waiting to pick up. Some of them I have them. I want to try to update you on this. Considering we're looking, or at least I am looking for maybe a possible pullback, I want to be a little more cautious on any longs. We'll describe some setups for you, but again, I think right now the hedge position and the shorter term time frame setups are the best ones out there today. I also pointed out that the 60-minute time frame has been really a good, you know, balance. Not this chart in itself, because it has that weird rogue candle there, but that 60 minutes has been giving us some good signals on multiple different charts. All right, so let's start off with a couple on this week's watch list. Now, we're going to go in just in order. I'm not going to start like with Costco. We're going to get to Costco right here. Here we have PKI. A PKI, great setup. HPS wedge pattern. That's our number one go-to setup combination. You have the nice divergence. You have the divergence there inside of a wedge pattern. The wedge pattern divergence tells you where it's going to break out. Actually, we actually had a nice little dip back here. We talk about the higher lows being put in for a longer term move, and everything working out good on that one. That's PKI. That's triggered. I'm going to bring it over here to give you an example of what it looked like. And a lot of these stocks we put in that last week as buy triggers instead of a pullback zone. In this case, you can actually see we broke out, chopped around. Now we're making our way. We're almost up to our profit zone on that. Almost up. You should get an alert on that if we get up to that level. Next up was MDT. This is a medical device stock, and I've traded it many times. Overall was pretty decent. The little wedge pattern, and a steep divergence right here. So we took that. It started moving up. It's kind of stale. It got a little stale there. We're holding here, and then we had earnings. And earnings, again, is our, that's our arch enemy. Anything on the HPS watch list is kind of an automated setup. So if you have news out there, and the news affects the stock price, it's going to affect the chart and stuff, and it's automatically going to, you really don't want to let news events and earnings affect your chart. You should actually understand that all bets are off when you go into earnings. With that said, we let the HPS play out. That one stopped out. I'll show you the setup. I'm actually still holding this because, we did get caught in the earnings. It was actually working out fine. Started moving up here, getting closer to our thing, and we stalled here a little. We had the underlying trend line holding that 200, and then earnings came out, and we just dove down. And of course, when you break down, you broke down. Now we're back down to this lower trend line. Now I want to see this a reversal and push back up to the 83. I'm not 100% sure I want to hold on to this any bit longer, but I usually wait for a 5 to 7 day pullback. And to an, again, I never have one position that's a big factor on So if we do get hit on a stock, there's other ones that we're in. That's it. But this is nothing I want to see. But down about, down. I actually have my everything is up at the office. I'm not at home right now, but I think we're down about 4 points on this. I also only have 50 shares of this, so I want to give it a little time, but one of them I think I might cut loose if it doesn't perform early next week and we start to make that reversal back up. I would expect Monday or Tuesday to get that move. We want to see that rotation and that turn back up, and the next level would be a gap target here, which is 82.20 zone. Now on the HPS watch list, you can actually see that this trend line extends right down, and that's where we are right now. So it's usually a good thing. And sorry for my dog in the background. Just a fast look at the weekly chart. You also see the weekly just getting oversold also. So the big pattern's up. It's a pullback on earnings. It's happened before when we reversed up higher, but I want to see it start reversing this week. This is our week. If we're going to see it, we're going to hold on to it or not. Early Monday, Tuesday. All right, next up, Corning. Corning, again, we've been following Corning for the last year, really expecting great things out of it. You can follow the trend here, moving on up. We topped out here. We got a little sell-off, and then the earnings came out and gapped it down. I think it's a decent enough pullback on this to start seeing this head back up. The earnings were nothing to speak of. It wasn't that bad. So expect this to be tested, and we actually just came back up close to the gap resistance area, expecting this to break out to the upside. Now the gap down on the earnings, I believe that was an earnings gap down right here with the volume. It didn't take its full rotation. It came up 1, 2, 3, 4, and the fifth day it started to move back up, which we expect on the 5 to 7 day reversal into earnings on quality names in an uptrend. Holding above the 200 period moving average where the stop is right underneath there, and actually it's looking much better. So let's show you the HPS setup on it. Now remember, the HPS setup, the stop is at 27 on the notes on this, but it talks about the monthly chart here. We got down to about 28. Now this is where we are. The buy trigger here, when we first put this out, gapped up, and then earnings came out and dropped it underneath it, held above that 200 period moving average and it's pushing back up. You could actually use this again and put it on your own platform, that 29.20 area. You can see it as a kind of an interesting zone. If we get back through that level, I would definitely say this is considered to be an active setup still. It is still active. There's no stop that's been hit. So we're going to continue to just watch this. I'm long on this stock. So we are good on this. And I'm long right at this level, 28.61. We're a little up on that. But a good position here. When we got in off, I think, off of this divergence here. Started moving back up. There's a gap up. That divergence was the key area down here. Little mini divergence actually was working. Earnings always takes things out of the chart pattern or whatever. We reset. We start moving back up. All's good. Next up is Alibaba, one of the best stocks going forward on my top 10 holding list. We had options in this one off the HPS watch list. We rock and rolled it, and we took it off right before they were expiring. On the day they were expiring, we got the maximum amount on it. So we had a nice trade on that. It still looks good. I'll show you the HPS setup on this, but basically, you know, it's not no longer active. It was saying watching. The reason is it gapped above its trigger zone, but we were in it at that time. But you can see here, it just ran right through our profit zone, then gapped up again on earnings, and then followed through. Now this was a 60-minute time frame, so it looks a little different on the 60 than it does on the daily. So remember that 60-minute was a 1, 2, 3 channel. Everything was set up on the 60-minute time frame, and that's exactly how it played out on the 60. Now this is you know, at a point where we have to wait for the next setup. We still love this stock. I still love it. I still think it has some really good upside in the future. But as you can see, we're kind of extended on the daily. We're starting to rotate over. I was actually watching the rotation today. We started selling off. And I said, interesting, you know, because I would like to get back in on this at a better price, at the right time, right place. You know, we'll meet again. The possible right time, right place, because this was a mid-pattern divergence. We tend to sometimes get that higher low being put in on this trend, this underlying trend. So if we can actually rotate back a little bit more, I'd be willing to take it off the trend line and not look for a full rotation. And wherever that price it lines up, that's where it would be. So we'll be watching that one going forward and wait for that trend. And again, these stocks are always up there, so you can always go back, refer back to it. This is a little bit different on this. It's not the same setup on the, I'm looking at the daily chart. The other one's the 60-minute time frame. But the pullback here, if we rotated back down to that trend line, you know, what does that give us in price level? Well, we have to see. I would suspect back down towards the 20-period moving average, which is about 163, which would be perfect. Next up here, the dreaded Costco. Costco best bet of the week. Big candle here today, or yesterday. News came out, Amazon news, that was already affected the stock back here, and we sold off, and we got all the way back down here. We started building back up. We took our trade into a divergence back here, a pretty decent setup. We were in the money about $300, and then news came out during the day. You'll see exactly when it came out, right before 2 o'clock, that Amazon was going to close the deal on Monday with Whole Foods, and they were going to slash prices, and it just scared the whole restaurant industry. The whole industry puked really bad all across the board. I mean, TGT, anything that competes in any way with Whole Foods, Kroger, all of these got crushed. All of them sold off. Costco, Kroger, General Mills, GIS, that got hit. A lot of different things. That just, even if you sold bread out of a deli, you probably got hit. It was just that kind of sell-off. So the Costco, interesting. Again, if you listen to the show the last couple of days, I'm just kind of wondering when people are going to realize that the clientele for Costco are not going to be going to Whole Foods because they slashed their prices. Costco's been having some great returns, great earnings, and I just don't see. I think it's just, you know, of course, you know, a major news out there, the whole sector gets hurt and everything gets dragged down with it. I understand that, but sometimes you get an overreaction on a certain stock. I think Costco is one of those overreactions, and we're going to start heading back up real quick. And again, you know, if you're familiar with Costco, their whole platform and the bulk shopping and the low prices, but it's really a bulk place where larger families, blue collar worker, you know, it's just. And then you had the Whole Foods, which is more of that. And I was trying not to stick my foot in my mouth describing the clientele at Whole Foods, but totally different clientele, more of the single professional, quote, yuppie, you know, who knows? I don't even know, but not everyone, you know, not labeling everyone, but you know what I'm getting. A little bit higher paycheck, a little bit less worried about, you know, putting food on the table for the kids. So two different clienteles. Will people from Costco be affected, you know, get turned on to Whole Foods because Amazon has them? No way. They're slashing prices on organic foods and meats. This is not a Costco product. You know, you're looking at a package of 20 chicken wings, or, you know, a 2-pound box of Doritos. You know, the big bulk items for kids, cereals, clothing, clashed items, discount prices, totally different. So right now we have Costco started to bounce back up. Take a look at the daily. Took out the lows and put in a little candle here. I think we returned back up here. I do. This was an HPS setup. All I could say is that the news affected it. It broke it down. After it was working fine, it was already starting to work. We added to it. You know, we're holding that trend line. But news is news. So it goes down as a stop out. I am still holding the Costco. Feel like it's going to work its way back up. I think my entry is at 1657. It's 152. You know, I think we're in the right area. I think we move back up. I think we get back to that 156, 157. I might not make that major battle saying that we're going to get right back up above 160. I want to get this bouncing and maybe put my money somewhere else where it'll be less affected right now, because there is an Amazon effect that has put some pressure on these stocks. So lots of times we want to just clear out, get to a sector that's not being harassed by another stock, and you know, put our money to work there where it's, even though I do think there's a buying opportunity here. So there's a good trade opportunity here. Right down here, 152s, 150, 149, 152 area. Next up is Brinker, EAT. We left off right before vacation, pointing this one out, and it was a large channel. Let's see if we could even, you could see the kind of channel here. There was a little divergence here, which I was interested in. Right here, it's reversal. Pushed higher, rolled over, and then got you know, then followed through. Now the Amazon yesterday did affect some of the restaurant stocks too, so it was a little extra downside. Today, Friday, started pushing back up. It has not triggered on the HPS. It never crossed our trigger line, and we're not in this, but it is. You know, someone mentioned maybe a reversal candle today. I would not consider this a reversal yet. As you can see, we didn't get through the buy trigger, and we kind of rotated back down. It didn't hit its stop. Like I said, it says watching. If you go to the HPS, it says watching. The stop doesn't activate, or that alert doesn't activate to be triggered unless the buy signal is triggered. So you have to be in it to get stopped out of it. So this hasn't given us a buy signal yet. It has pulled back. I mean, I might have to rechart this one up. There's a lower, tighter trend line here. Is there a possible bottoming candle? I'm not going to classify it at that. Right now, it's a neutral setting. We go back over here. For me, I would rather. I'm interested in this sector. I definitely am. I'd like to get another divergence set up, and I would take it. we'll keep it like it is until I change the if I do set a divergence, I'll set up another alert on it, but right now we'll keep it just in a watching position. Next up is Discovery, D-I-S-C-A, D-I-S-C-A, Discovery. And again, you can see the good setup here. Again, nothing that I'm so excited that I'm not in this, even though it did trigger. Let's take a look at the reason. Now you can see this underlying trend line. You can see this big pivot area up on top here, the second one and the third one with two big candles. Look at those, gap up and a gap up. So we actually have a 1, 2, 3 pivot, and we pay attention and we buy the third area as long as it's oversold. That's exactly where the alert came in. So if you look at the HPS alert, again, it's automated. You'll see that the price, I put this in here saying let's wait until it gets down here, analyze the trade, see if we want to get into it. Doesn't mean that every trigger is going to be a buy signal. We want to make sure that that is part of the equation. A 1 indicator setup, a trend line, or a 2 indicator setup. This is a trend line pattern setup. But will we have a divergence? Will we have oversold stochastics? We will. This most likely would be a 3 indicator setup because you have the stochastics, lower trend line, and a recognizable pattern. If it had a reversal candle, that would even be better. If it had a divergence, it would even be better. But it is recognized as a pretty decent little trend line. Now this could, as you can see, as the price moves sideways, you have a chance of hitting this. So this buy zone should be down here on this trend line. But it gives you enough notice to look at the stock, analyze it, and then watch it. Not bad. You know, it's above this stop. The stop gives you a very tight move. But actually, I would watch for a divergence in this one also, which we haven't seen. I would look for a flash, take out the lows, flash low. This would trigger that stop, even though it's not no position in it. Would trigger that, but that would probably be an entry for me. And again, you can't really plot out a divergence setup with an alert because you need to have that higher low in the stochastics, and we're just measuring the price. So we could do half of it. We could say, all right, if the price breaks down through the recent low and the stochastics hold above that 20 line and start to turn back up, that would be our divergence, and that would be our reason. So this is in focus, even though it is it's not, it's active. It's almost it's you know, it's an active stock. You know, you have a shot here, moving back up, grinding back up into the pattern here. But of course, we like the reversal candle divergence setups. Still active. All right, next one up here. I was hesitant putting this one. Normally, I don't put the $20 stocks on the HPS watch list. I liked that we had the wedge pattern here on GE, and we're pointing out this kind of this zone here, this zone of that we look for a breakout in a wedge pattern. Now, wedge pattern, the lower trend line definitely established. The top trend line, good enough. And as you can see, everything kind of just holding on here, but it has leaked out to the tip of the setup here. It's not giving us any breakout in that 65 to 75% zone. Sorry again about the dog. So no position in this, and as the HPS here did come down to its stop zone. It should be over here showing you this chart. This is a chart we really want to pay attention to. 75% zone, 65 to 75%. This is where we wanted to see that breakout. Instead, we just hugged that top trend line, and we drifted back down to the bottom trend line, and we're just really tied up. Lots of times I don't see this. I see this, if it doesn't break out at this point, lots of times it'll just dribble out, and lots of times just break down. All right, so here's the HPS setup. Did see that just before, and even at that point we're looking for a pullback, so I was giving it the benefit of the doubt. Let's get a pullback, but it did, and I had a very, very, very tight stop because we wanted this channel to play out. If it didn't play out, like I said, no harm, no foul, get the hell out of Dodge, and that's exactly what this told you. It didn't play out where it should have played out, but it didn't give us any other indication. Lots of times we'll have a wedge, we'll get a divergence, and we did not have that. So again, I always look for that divergence in a wedge, and then looking back here, what you can actually see is maybe even a different type of channel starting to set up. So if I took this top trend line and extended it over here, we might have a little lower low down there, but not interested. I'm going to take that off. Not in this one, but just not a good setup. Should never have been on the watch list in the first place, I don't think. Now, we've talked about the OMC before, because I'm still in that, but look what this one actually did hit its target. Then there was news out. So look what happened here. This is an HPS setup, and I want to bring this back because lots of the HPS setups that hit their targets always could be reviewed to see if those technical levels that are plotted out on the charts come back into play. And this is a good example of that. We had a nice setup here, a lower trend line, over stochastic, recognizable channel, high HPS setup, and we had a nice move up. Second day, you could barely see that candle, but the second day we popped and hit our target. And then it reversed and chopped around, and I gotta show you a different angle. I had to zoom way out because that gap down that happened in this took it right out of the channel, again, other news, news, earnings are the arch enemy of setups because it takes everything out the window because it goes on to the release and how the guidance, how the market perceives everything. Impossible to tell, but that one actually did hit its target. So this is a potential live video. I started that video back up, finishing up the watch list. I decided to go live on the air, and actually I should send out a post that I am live. See, half of the stuff I don't even do. Because it's just so much. I always say, if you're lucky enough that to catch us on doing some magic, then you're lucky. But I should send out a note. I will in a second when I go get my drink and finish this video. But you can see what I'm looking at here. So you have the low here with a low. You have a lower low, but this one's turned back down. It hasn't crossed back up, but that's what we are looking for. Another divergence here. Nice divergence here. Do we have an underlying channel? Well, you got something pretty steep here. I want to put in a couple different lines here. I'm going to put that line in. It's interesting, but we also have something a little steeper here. Kind of, it's nothing really lining up here too good. So yeah, no, it doesn't have that channel that we're looking for, but it still is a possible divergence. That is Martin Marietta. Let's continue on. Ulta Salons. Now, we're following this one yesterday into earnings. This has an earnings setup. Damaged goods. Not worried about it, not looking at it, not trading it. So pass on that. Alright, so I just started that video again. And we're kind of closing up the HPS video, but I am doing this live, and I was going to come back on and record any of the new setups. So as I did that little extra video thing, I'm just going to go over the three that kind of jumped out at me, but haven't really been officially claimed as a divergence. We have the VRSK, which has that potential set up, but not yet. The HP is on the lower trend line, giving us that little pop. It continues to look pretty good. I like this one a lot. If I do like the oil sector, I like that one. There's some other ones that we liked. Corning, GLW. I think that's it's getting into our very bullish phase right here. Especially this market kind of getting a little soft and weak. This is a very bullish move here on both the stochastics, and actually holding the last 3-4 days here. Have been holding and grinding high and trying to break out here. So this appears to be very bullish, and expect this to break out of that channel. So that is going forward. Looks great. That's why I like that one. That's why we're in it. Then we have Mattel, MAT. This is another lower trend line. Remember, insiders bought this one from on the way down. And, you know, I try to stay away from these type of stocks. But this one attracts me because of the insiders, the lower trend line, and the quality of the, you know, the iconic brands behind it. Matchbox, Barbie. The, you know, if you follow toys. Well, and the insider buying on this. And speaking about insider buying, another position I picked up just on insiders is this SeaWorld. And the SeaWorld had some buyers coming in. And we actually had, I don't know, it was news earnings. It gapped down, but the reversal was fast and furious. We're back inside the channel. And when we see that type of strength, it is usually a great sign. So, again, the insider buying coming in recently again. I think it was yesterday, the day before. Today we had a nice pop. And there's a phone here. Be right back. You would have to continue to hold on, you know, stay true to the criteria and stay true to the methodology, so your so your consistency's there, and you're not, you know, kind of what is it called, diluting the form, you know, just messing up your stats, because you could guess at this point. Right now it's telling you trend line, 50 period moving average, oversold 80. Everything tells me they're probably going to get a little pullback here. Doesn't mean we're going to pull all the way back.
So you're saying have a plan and trade your plan.
Yeah. Trade what you see. Trade what you see. That's just
trade what you see. I love it. God bless Master.
But let's just say now, because it's a divergence, I think that you have a better chance of even moving higher on this. Because a divergence tends to give you the big chance. You know, if you have a channel and you have a divergence in that channel, I'd say there's about a 90% chance that channel breaks out before that divergence gets taken out.
Okay.
So I don't know how this played out. I think we saw it did move up. I'm not sure. All right, broke out of the channel. So it did break out of the channel. I would consider that a successful, you know, test of the theory of that.
Yeah.
And but also we start to see a little pullback as we start to rotate back down here, which is fine. I mean, like I said, you have a choice. You can pull back a little, but I think the 5-minute time frame, if we look at that underlying 5-minute, and at this point right here, what I was going to mention, this looks also like a 3-minute time frame divergence. So I want to look at the 3-minute. And yeah, you have the low and a higher low, so it's definitely a 3-minute divergence. And I want to look at the 5-minute divergence time frame too. And now the 5-minute, barely could see. It doesn't look like a 5-minute, just kind of flat. You can maybe make an argument that there is a divergence there, but nothing that nothing like that was on a 1-minute time frame. But the one thing I will say is I don't know if you could see it. I don't think you can see the stochastics, because let me move it down here. Sorry. There we go. Let me show you the 3 again. Here's the 3-minute divergence. The easy one. Lower low, higher low. 3 minutes, still not overbought yet. So that's important also. So this is, we're analyzing this trade. We're getting in it, and we're determining if we're going to continue to hold it. Here's the 5-minute time frame. Not really a divergence, but you could classify it as one. We definitely have a 1-3-minute divergence, and we have a channel. It broke out of the channel. And look where this is. This is pushing up. It's up around 50. You know, it's definitely not overbought. So there's a good shot that this move is going to continue to move up higher. So we'll go back to that 1-minute time frame. We'll just follow the trade and see what happened here. So it's just chopped around sideways. Chopped around sideways. And a lot of chopping. I mean, a lot of chop. When we rotated back down here, almost got oversold, and chopped back up, got overbought. So at this point, this is a lot of chop. This, from here to here, was your high probability move. From here to here. That was a very good, nice move that you could predict, because you saw a divergence, you have a channel divergence going to break you out. At that point, you got what you wanted. And at this point, you know, that signal is no longer active, and all bets are off. I mean, we could get a lot of chop here. It might go higher, but who wants to be frustrated with this? I want to be here and out here. I don't want to deal with this. I want to be able to get in, see a divergence, and get a nice move. This is a scalp move. On the 5-minute time frame, probably looks a little bit different. Now I want to continue on. Let's see what happens. Nothing really happens. All right, it's a chop fest. So we
Gotcha.
Yeah, but that move did give us a nice little move out of the channel. Let's wait and take a look for the next divergence. Now we're on the 1-minute time frame. It's 12:40. It's lunchtime.
I'm not seeing your stochastics, Johnny.
All right, thank you. Yeah, no. All right, hold on. Yeah, you are. No, you're not. Why not? Oh, you know why? All right, thank you. Damn.
I don't know why. Do you know why?
Yeah, I know why. Because I'm not capturing them. Hold on a second. Not that. Sorry. I'm doing the video. I'm doing the latter part of the video with this little segment because I thought it was an interesting. Thank you for letting me do it with you.
This is a great teaching, Johnny. I'm loving it.
Oh,
I'm learning.
well, let's just go on. Like I like to do this every week. I think everyone should do it. They should go back through their ES chart. Go back through their ES chart and just kind of just scroll through like you're going tick by tick and pretend you're looking at the trade again. Here we have, what might be considered a double top divergence, but a little too, do you understand that we had a double top and a lower high on that? It pulled back a little. This is on a 1-minute time frame. At that point, you did get a nice little move down, but you got oversold, and from that point on, you got a little bounce. So it's a fast scalp move. It's not a perfect divergence. It's not like the one we just saw. And again. Okay. This is actually probably, and I didn't check on it, I don't have my triple stochastic set up here, but that might have even been a triple stochastic flag setup if we use all three. But what we're looking at divergences, that's what we're looking at. Let's go into the next overnight.
We're looking at divergences on the 9-3, right?
Yeah, 9-3 we're looking at. Okay. Overnight, we're not paying attention overnight until about 3 o'clock in the morning. And we come up here and the boom, 3 o'clock approaches, and then we got a nice pop. And we're just looking for. You have it.
There's some nice action after EU opens at 3.
Yeah, there is.
Then about 6 o'clock, around 6 o'clock, there's a pop.
Yeah.
And around 8 o'clock.
Now this is Wednesday. Now Wednesday had one of our best divergences of the week. Let's go back here. I already showed it to you. I didn't want to do that. But
that's okay.
I wanted to get to this point at the open, and this was my first day back, so we saw a lot of volatility happen, and we actually identified this, I think, when it happened. So we're watching the market here, and a quick 9:30 pop, and then a drop, and that drop, and we already start to see that the stochastics are starting to rotate back up here. We're starting to see that because of the chop and stuff, and I think. We do see these divergences happen lots of times in that first hour of the trade because it's just so much action. And there's definitely now we could definitely see that was a divergence. We had the same criteria being played out at that point where we started to see we had the higher low and the lower low in the price. Here you have stage 1 of your divergence, and this is where you have to look for it. You have to, and over time I think it'll become easier to see, but there's your stage 1. And that stage 1 lines up with an oversold stochastic down here. Let me see if that,
Eureka! I got it. I'm seeing it better now. Because, like, if you're talking 9:30, we're now at what, 9:50, 10 o'clock?
Well, we're looking at the 9:30 low and the 9:40 low. The 9:30 low is here, and the 9:40 low. The 9:30 stochastic.
Chart. Right now, you're probably right at 10 o'clock on this.
Yeah,
this last candle on the right.
Yeah,
and I'm looking left, and now I'm seeing the divergence. But how do I trade the divergence that's back here at 9:30 to 9:40 when we're at 10 o'clock?
Well,
that's what's confusing me.
Well, you have to be right on top of it. That's why we're like, at this point, I just said, at this point, we're looking at it. You're saying, all right, what do I know? Stage 1. We have, where do I look for a divergence? How do I look for divergences? The first thing I want to notice is that our stochastic has to rotate back above 20. We have to have a low. The second thing I want to know is the relative movement of the price if it's close to those previous lows, I want to take out that low. So I'm always thinking, like, does this have an opportunity to give me a divergence? So I'm already thinking, all right, we're already kind of touching that bottom. This is pushing down. It's way above the low here. So, you know, I'm ready for it. That's when I'm actually ready for the divergence here. So I'm watching the price action. We kind of just gap down there, and all of a sudden we're starting to turn back up as the market pushed back up. So now I recognized that. I said, hold on, there's our pivot area. At that point, when we're identifying that pivot area, it's about this way. We'll give you a benefit of the doubt. We'll take the high price here, 24.68. We'll even go one more candlestick and see if it doesn't. It just takes off. So, I mean, give us the benefit of the doubt after that. Let's push this up a little, and you say you got a bad fill, and at 24.68.50, because now you can definitely see, gives you enough time. And this is what happens a lot of times. You'll see that divergence, and by the time you get in, you're looking back. I said, that's the divergence. I should be in here. You're never going to be in here because it's just so hard sometimes with the volume.
Okay, that helps. That helps.
So you still want to be trustworthy. You still want to have that divergence and go with it, though, because it's going to give you bigger moves. Now this chopped around down. Remember, when you have a divergence set up, your stop goes in at the low of the second stage of the divergence. You know, trading the NASDAQ might be easier. The YM might be easier because you're not dealing with the aggressive, you know, profit loss as much as $50 a point. So it's you know, this moving from 67 and you're up here. Look at this. You're at, maybe you got a real bad fill, but you definitely taken the divergence, and it got to 68.50 and you're in. It continued to move up to 69.75. But you're not going to get that. So by the time it came back down, you're probably getting out here, maybe 69, and you're in at 68.50. So you know, maybe you got 2 ticks out of that chop. You know, if you're able to play that divergence, 2 ticks out of that chop. But you know, that's if you decide to play it that way, or you know, it does continue to move higher. So I mean, there was definitely an opportunity. But the point is, if you didn't take it off there and get a perfect exit and get 2 ticks. Next thing, you're actually pushing a little bit lower than your entry. Now there's a point where you have to determine yourself, say, wait, this divergence should be heading up. Why is it heading down? Well, it is heading up. It didn't take out the previous low. You have to let that play out. I mean, these are going to be channels. Look at the volatility here. This could easily give you a range of like this. You know, you could, as long as you're holding above that, it could come down all the way down to here, push up, come back down to the trend line, push up. And this little move here could shake a lot of people out because they're in at 68.50. Next thing you know, you're down at 67.50. You're down a point, and you're saying, "Holy shit, this divergence is not working out. It's going against me." But it is. It's just part of the chop. You have to have faith in that move, because look what happens after. Look at after that divergence. When I would say 70% of the time we look back at a divergence, it usually is the low of the day or the high of the day. Is defined by a divergence. The choppiness that comes around with it takes, you know, it is tougher to trade because you're focused on it. You're like, holy crap, it's all over the place. What if it drops? You know, I'm down $1. I got a bad fill. But that's done. You know, I'd say most of the times divergences. Let's go on and find another one. Here's another one. So that's a big divergence there. That worked out well. And then here we have a little downward trend, and
10:30, Johnny.
Yeah, what I'm seeing here is what I call a running divergence. The price is starting to make a low here, where we're low here. All right, the low is there, right down here. It's underneath that 20 line. I'm going to make it real tight just to kind of line us up. We're looking at that low here, and I said, all right, it's bouncing here. But then we're making another low, and all of a sudden I'm noticing that, hey, we're pushing above that 20 line again. And then we pop, and then we push down a little bit lower, and look where we are. We're holding above that 20 line again. So we're starting to see this what we call a running divergence. So maybe this is pointing to something. And then we see this turn back up. There you go. Yep, go ahead.
I love to short. I'll go both ways. I don't care which way it is. I'm looking on your chart at 10:30. There's a big red spike. The stochastics,
Mm-hmm.
the next peak is a great big green
Yep.
volume spike, but the stochastics are
When you
the
just
trend line down, but the price is going up. So we get to about 11 o'clock.
yeah, that's a
That's
divergence.
when the news starts closing. They start selling at 11 o'clock, and that's showing up on the chart from what I'm seeing
Yeah,
and what I know from watching the chart.
yeah,
That is a divergence.
yeah. It is.
Is that not right?
You're 100% right.
So that's a short divergence.
That's a
I
short
like
side
short.
divergence. That is a
You
high.
you just go long.
Yeah, no, I go short. I think we pointed this one out this week too. I said there was 3 good divergences here. One at 9:40, one at 10:50, and then one at 12:20 or 12:30. But here we have a high. That high represents a move over the 80 point. That's stage 1. Stage 2, the price comes back down. The stochastics rotate back down under 80. Stage 3, the price, or the second stage, the price quickly shoots up and takes out the previous high, which it does right here. Let me get my line in there. Right here. You can see that candle. And lots of times it happens so fast and it leaves a candle. So now you have the higher high. You have so many lines. There you go. Let me just throw that over there. That little higher high up there, that candle. So you have a higher high. And then this stochastic here, as you can see, broke down underneath that 80 line and put in a lower high. So you had a divergence. And from that point on, look at the big move from the divergence. Here you have a textbook divergence. Huge move. Textbook divergence. Huge move. Here we have a textbook divergence. Now we probably, again, be realistic. It just started to turn back up. Maybe you're getting in here late. You're in here at 20. We'll call it 24.70.50. You're in. You're seeing the divergence. You're getting scared.
Yeah.
You might not even take it because, oh, I see the divergence, but I'm looking back at it. And that's what you tend to do because they happen so fast. Unless you got the Rambot on your side, which is a Day Trading Radio free product on the Rambot. If that's giving you a clue, and that works great. I think people need to take more advantage of that.
It's a great alert. Yeah, I love it.
All right, so that's our divergence. Let's just see then. All right, so Sunny's in that trade. Her stop is under 69, and right now she's gaining some action on this. Boom! It just takes off. Now the hard part is this is a 1 minute time frame. We're extended. How much profit do you want? You got to 70.50 entry. It's actually gone up to 71.50. It's actually gone up to 72. Where's your exit here? What's your criteria to exit? Are you gambling?
1 point.
Huh?
I'm scalping. 1 point.
1 point. All right. So you're out. That's fine. And you should know that because right now you're extended here over that. Is there any other indicators that might be pointed up to make it a high probability sell signal? It's not really a sell signal because this could be embedded. So we look at that 5 minute time frame to confirm our bigger trend. So we'll go to the 5 minute. Let's see where that is. And the 5 minute shows us something interesting. It's actually over that 50 line. It's turned up before even getting oversold, so that was showing some strength. I usually look at the cash chart at this point also, which gives us some clues. But just looking at that 5 minute time frame, it does look okay.
Johnny, you can see the buyers coming in with those long lower wicks.
Yeah. So we'll see if it does continue. I don't know if we did or not. I mean, like I said, this trade on the 1 minute divergence setup should be taken off, here. It should be taken off just because that's what the indicator says. Or you're going to deal with a chop or a pullback. In this case, you chop in sideways. Then it continues to go, which is fine. All right, whatever. But as we tell you, if you are going to get a big move, it's probably going to start off with a divergence. So even we might take things off early, I would use the next thing, the important thing to know is to use a certain technique using multiple contracts so you can take advantage of the big moves. One contract is hard, because you're probably leaving a lot on the table with these great setups.
One contract is hard. However, it is also possible to be profitable with one contract. I know. I do it.
Yeah.
Okay, you can carry on.
All right. Let's see what we have here. There's another good divergence. Someone's mentioned in the Yahoo chat that about hidden divergences and what hidden divergences are, and I classify those as hidden. They're always hidden. I do a good video on different type of divergence. It's in there. I don't know if I could show you an example of one. They're harder to find. I could go back to examples on in some of my videos, so I have to dig that out. So let me see if I could even do that. Let's just go through and look at a couple more divergences here. There is a divergence that we are seeing. I would consider a hidden divergence. It's kind of a running divergence where we have George Lane classifies it, or his trading buddy classified it as 3 dives to a bottom and 3 drives to a top, meaning you make a series of 3 attempts to or 3 power drives lower, 1, 2, 3, before the reversal happens.
I see it.
And you could read that into stochastics. You could see a divergence happen. This is not that typical level, but on the last few videos I've been putting out, I've been showing you these divergences that have been playing out. But anyway, we're into Wednesday in the afternoon. I don't know what happened here. It looks like there was some news. The volume came in. It was a fast little spike down. There was a little reaction here. Big candle. It got oversold. It looks like it was a possible divergence setup if we actually made a double bottom. But it didn't really make a double bottom. I mean, at one point, you might probably take this as a long. But that's, I don't know. It didn't fit in the criteria.
Tony,
what?
Question. Double bottoms.
Yeah.
Where you have that last circle, I wouldn't consider that a double bottom.
No, I wouldn't
but
either.
Charlie said today that double bottoms don't have to be exact. And it kind of blew me out of the water, because everything I've learned about double bottoms is that a double bottom at 62.50 means that both of the lows on the candles that are involved.
Technically, you're right. Technically, you're right. You want to hold the bottom. You want to hold the bottom. But what I'm looking at usually is the relative closeness to the low and the strength of the stochastic. So if we get close to that bottom,
I can see a tick, but not 2.
Yeah, no, I understand where you're coming at. That's a good argument. You either you're playing it either as a double bottom in the way it should be, or not. I call it kind of like a double bottom because there's 2 candles here. There's 2 reactionary moves off of this, so there's definitely a reaction here. And was the divergence here? Everything seems to be pretty normal. So,
and you can also draw a trend line from the lowest low to the second low and extend it out, and you'll see where it starts to go back down.
Here we have the overnight trade here, and even overnight here at 1940, which should be what is that? 740. We start to see what I was just talking about. It's kind of a running divergence. You have this series of lower lows, a series of higher lows, and then a pop higher. But if we zoom out here a little, you'll see that this move was significantly, a change of trend. We talk about divergences defining channel breakout. So you had a small little wedge pattern right there and a divergence, and that divergence led to that breakout of the wedge pattern. Not a lot of excitement. I mean, not like you're going to get rich on these type of trades overnight. There's no volume, but they still work out really well.
Yeah,
if you could see that. Then we continue on, and then we have a late night trade. Nothing's really going on here. It's really sloppy. And then Thursday morning comes around. Some news out this morning. And then 8:15. And then boom, market's about to open up. 9:30 open. Clear-cut divergence right at the open. Clear. Very nice one. Actually, this is a tougher one because a lot of people, we pay attention at 9:30 open, And at 9:15, you're not looking at that as a low here. That low and this low back here coming out. Even this might even be.
Johnny, do you ever check the 8:30?
Yeah, it's right there.
8:30 to 9:30 gives you a clue.
Yeah. It's a good time frame. It's definitely 7:30 to 9:30. Definitely divergences work. This divergence starts off with this low down here. But this is really a big steep. We talk about this. Rob likes to talk about the steepness of the stochastic divergence. And that's the angle of the line between the first low and the second, the higher low. Now, is that one? No, that's not one. This is the one because you have a pivot that takes out the recent low. So you have that, that low, and you have a higher low. Well, normally that should be underneath 20, and it's not. So here you have another situation where you have another divergence right at the open. If we go back here and say, all right, let's be realistic enough with this. Here's our second liftoff. Don't see it yet. Don't see it yet. I see the candle breaking down. Next candle, next minute comes up. Market, next couple of minutes, market here quickly gives us a fast divergence. That happened fast. I don't know if you were able to get in on this. And if you didn't, and your worst case scenario is you're up here on your 20.
Would you throw a market order at that point, or would you put a limit?
Yeah, you know, I'm comfortable enough in the stochastics divergence that I know that I'm going to get a bigger than average move. So if I'm looking at a channel and I'm analyzing it, I'm just saying, all right, a market order, I'm looking at 2 to 3 ticks. You know, I'm willing to throw in a market order.
So throw it and get in.
I want to get in. I don't want to miss the opportunity, you know, especially with a divergence. Now all of a sudden it starts to chop around, but then boom, it didn't follow through. The divergence once again marked off a trend break at 9:30, especially if they happen at 9:30. That came in at 9:30. By the time you saw this, you got in late, but that late was still fine. You went from 61.5 to 64. There's no doubt you're getting that. And if you got in here and you see the chop down here, you were at 61.50. Are you handling the heat to 60.50 or 60 and a quarter? Are you able to handle that heat? 60, you know, you're down 1.5. Well, long as it's holding above that second stage, that lower divergence candle, that's where your stop should be. You have to let this play out because the majority of the time you're going to see this type of breakout. You had a nice move up and a nice breakout. Now, after the fact, we got over, you know, then there was some news came out. This was a big move down. I don't know what the news was.
Oh, yeah.
It doesn't matter what it is. I mean, these are scalps. It's not like you're going to be holding into this. You have to realize.
And you got stop set.
Yeah.
That's your stop set.
Yeah, and that's your stop anyway, and your stop is set. So all these divergences have given you a profit if you were, you know, if you did work the signal the way it should be worked. Now this,
if you know how to see them.
Yeah, if you see them, we see them. I mean, we do see them during the day. It's just that
you see them. I don't see them, but you see them.
Well, that's what I'm doing. I'm trying to get them out there for everyone.
I know. You do a great job.
The here, you know, I see the little nice little lift there, and I'm looking here, and it's not a pure double bottom like you said, but it's the steepness here compared to the steepness here is the divergence I'm looking at. It's a steeper turn back up versus this, so that's sometimes I call it a double bottom because it's very close to a double bottom. And you know, if you see that divergence or that steepness turn back up, there tends to be a bigger move here. So we had a nice move on that. I mean, these are the only situations I would take. So I'm saying, all right, I'm looking for a reason to trade. That might be a reason to take that trade real fast. What would be another reason? And we're only pointing out the reasons. So I'm going to go real slow here. Market here at 230 is drifting down. I don't know what's going on here. It's Thursday. This is what we have going on. We have this downward channel. Do we have a potential channel? Do we have a potential wedge pattern playing out here? Maybe. I don't know. I don't remember what I was posting on Thursday. I don't even remember because it was so frustrating that day. Well, right now I'm seeing this kind of a wedge pattern. I'm still looking for my divergence setup. I don't see it here, but let's see if this wedge pattern, what happens to it. Starts to break out. Nope, it comes back down. Wedge pattern looking a little sloppy. Still tight, but starting to break down. Oh, it broke down out of the wedge. Didn't really give us any divergence. Again, if I'm going to look at a wedge pattern, I want to see a divergence that kind of gives us that's the timing factor of a breakout. This one broke down, came back into it. Looks like there was some weakness going into the last hour. And of course, the last hour is our no trade zone. And then we close out. Market continued to sell off here. That was Thursday. Then Friday, I don't think there was many things happening today. So there was a few good divergence earlier in the week. What's this? 1:30, 3 o'clock in the morning. 3 o'clock comes around. This is Friday. This is today.
No, that's last week, 8/18.
Oh, is it last week? I went back all that far? All right, good.
Yeah, you did.
All right, well, that's
okay. It's still a good lesson.
Yeah. No, it's good. That's excellent. So, all right, so we're in the middle of the day on Friday, last Friday. I wasn't around. I'm looking, just backtracking. I can find these things. Here we had a kind of a top. What time is that? That's overnight trade too. That's an interesting one. We have a kind of a high and a little higher high, a little low, and but that's above the 80 line. And my criteria is that lower high has to be under 80. But it was a visual divergence. Let's see. It's coming up on 10, 11 o'clock, 12 o'clock. It's 12:45, Sonny.
Oh my goodness.
12:45.
Yeah. Oh, it is, isn't it?
Yeah. Holy crap. Is anybody out there listening? It's just me and you.
You and me. You just keep going, baby. I'm learning a lot. You just keep talking.
All right. Let me see. Where am I? All right. So we're on that Friday. Coming up on the open.
This is Monday this week when you were fishing.
All right.
During the eclipse.
This is Eclipse Monday. Now we're on Monday.
Yeah. Yeah.
All right. So Monday opens up.
Have I worn you out yet?
Now, here we have a 10 o'clock low and a 10:20 low. You see how this low, you see this kind of a decent pivot, and then we have a nice move down, and then we have another decent pivot. We have these just two distinctive trend line, two distinctive pivot areas, two distinctive low lows, but we're not seeing a divergence on the 1 minute time frame. But this is the type of setup that you'll eventually get used to, and you'll say, all right, there's no divergence here on the 1 minute. They both come back down, but this would fall into a hey, thanks, Mag. This would make me look at that 3 minute time frame, because this is the type of distance that you're looking between a low and a lower low. This distance, this kind of ratio, about 20 minutes to an hour. If you could see a low here and a low here, just remember, it's again something that you learn over time, or someone's going to tell you, hey, pay attention if you see this kind of just setup. It's hard to describe, but I think if you understand what I'm saying, it's just a timing. If you see a nice low and another low, it's about 20 minutes to an hour apart, and it's not showing up on the 1 minute time frame, it probably will show up on the 5 or 3 minutes. So I'm going to switch to the 3. Not seeing it on the 3, so I might be wrong on this in this case. And that I'm not wrong. I'm just always checking that level, and it didn't give me anything. If it did give me something, then I would be on top of that. So it didn't give me that.
Okay.
Not that I was expecting it, but I would check that type of setup. So no, because it looked like a perfect setup. I'm like, wow, that really did move nice. I wonder if there was a divergence there. Nothing there that we could have identified as a divergence, but it still made a nice move, for whatever reason. The everything else here seemed to be pretty steady on the day. A nice rotation up. This is on the 1 minute time frame, and then a nice rotation down. These channels tend to play out these possible channel trades here. Just looking at out, I'm not seeing any divergences there, so I'm just continuing to Just that's what we're focused on right now. Again, some days you will get that. Some days you will get no signals, or none that I could see on that 1 minute time frame. That was Monday. It must have been It must have been because everyone was looking at the eclipse.
Well, yeah, it was kind of weird Monday.
It was, right? So Tuesday comes around.
It was.
The energy was real weird. Out in Oregon, all those tree huggers out there, they were closing the stores early. Even the Starbucks was closed. The REI store was closed. It's like we're all closed for the eclipse. I'm like, come on, you're a corporate store. Why might they wanted to see the eclipse? They're open. Everything opened late for the eclipse. I couldn't believe it.
It was crazy. There was a strange energy, or lack of energy.
Yeah.
Monday. It was just weird.
9:50. I'm reading Toon's question there.
I'm sorry. I have to apologize to the members in the chat room. I have been so totally focused on the chart and what you're teaching that that's the only thing I see. I popped it full screen, and I'm just sitting here.
Now let's continue on.
Screen and listening and learning.
So we're going to continue.
So I apologize to everybody in the chat room for not paying attention.
Well, it's Sonny's fault.
Yes, it is. I did it again. Damn it.
So here's Tuesday. Look at the volume that came in at 9:30. Blast off out of the gate. Blast off here. Market here really bullish. Must have been some news going on here. Really, really bullish. Not seeing anything other than very strong strength. And once you start to see this strength, you have to understand, hey, be careful. Try not to focus too much on always trying to call a top in the market. If this market wants to go higher, look at it go higher. Now that's what this was doing. This is going higher all day long. If I was going to look for a divergence, I'd probably look for a divergence on the pullback, because you have the bigger trend as your friend, and you sometimes can see those divergences on these pullbacks. And I could actually spot one right here. Let me back it up. Let me back it up here. It's a hard one to see, but we know that the market is extremely strong, so we're watching the first pullback. Any significant pullback that breaks under the 20 and has a very tight channel to it, I'm looking and I'm watching it. So I'm watching that, and this is right here. There's a little double bottom and a higher low being put. A very hard one to see, though, but it was a very strong market. So the stronger the market, the less pullback you're going to get, and probably less opportunity you're going to see as a divergence. But that was a little minor divergence with underlying channel, and it did pop in the direction that we wanted to see. So that was a small little opportunity there. 2 o'clock comes around. And again, you got to find those divergences in these channels. Channels are very important. You got the divergence in the channel, and it's set up like this. Look at the results. This is actually quite a nice one. 1245. If I could see that one next week, I'd be on this top of this one. Again, you're probably getting, worst case scenario, you're in at 46 or 47. 47. It did go up to 48.5, but you're not going to get all that. So maybe you get 2 to 3 ticks on that. I just say these are $20 bills laying all over the place. As long as you could spot them and take advantage of them. So you're building your, and not take anything else. Here's another double bottom, low, a higher low right here. And look at that big move off of that. Underlying channel line. And then big move after that. So we had 2 slight divergences. Higher lows, double bottom. And big move. Big move, big move. Definitely giving you something on that one. Hey, Jeff. Doing late night show tonight. Welcome from traders around the world. Getting up in Asia, or getting up somewhere.
Oh, they're already up and
Yeah, they're
trading,
up.
Johnny.
They're up. They're getting up in
It's
Europe.
Friday night. There's nothing moving.
Yeah. Nothing's moving tonight.
Except us and doing a lesson.
Yeah. All right, so here we have Tuesday overnight. I'm not paying attention to it. Next week, maybe Monday we could trade some overnight stuff. That might be actually good because I'll still be free.
You're not free, Johnny. You got kids. Your life is not your own.
Here, look at this. Look at this, Sonny.
Same.
Same. So, look at the beginning of the day. We're seeing the divergences. The 9:30, 9 o'clock coming around. It's just about ready to open, and boom, we have a early morning reversal, fast reversal. You see the divergence after the fact. This is no doubt. You see it after the fact. You're looking back. You're saying, all right, it's about 9:45 now. Maybe it's even 9. Well, now we're really starting to lose the edge here because that divergence. I don't like to get a divergence after it's really gotten overbought. So this was a fast and furious one, but you had this low, spike low, and a higher low here. So you had the divergence, spike low divergence, which was nice. And that really came in right here with the higher low in the stochastics versus this recent low. And then from that point on, you had a nice drive. Now, I don't know if that would have happened so fast. Worst case scenario, you're up here and you're like shit. I'm in this stock up here. I feel like it's already extended. Probably, you might be having a little problem with this one. I don't know how this worked out, but you know what? It chopped around, actually pulled back a little based off of that, but did run a little bit further. 44, it did move up to 46. Again, probably a 3-tick trade at most before you want to get out of it or just start to lose faith in this and say we're due for a rotation back down. But overall, the stop underneath that would have given you much bigger gains. Again, this divergence really defined the low of the session. It really did. It really was an excellent divergence. Here we have a fast little pullback. I want to show you another one that just happened here. I don't even know if I even noticed this one, but I was probably busy with the tradometer taking a run to the bank this week. It was really distracting, so I apologize. The show wasn't the best it could be. But this is we're always looking at the lows. We're looking at the series of lows, the lows and highs, the highs and lows, and comparing the stochastics with it. So nothing really happening here. No divergences on the sell side, no divergences on the buy side. We do got an oversold low stochastic setup here. And then we see the price coming back down. But we start to see this maybe starting to turn back up. Now, all of a sudden, now you can start to see we held above that 20 line. And you definitely have another divergence here. So you can see that spike candle spike down. Argument's sake, you put your stop in underneath it. This one looks a little shaky. Looks like it's going sideways, but boom, it all of a sudden takes off. And now it's already extended here. It's already extended. This was a kind of a flag setup. We did break out. A divergence will predict a breakout of a channel. You had a 1, 2, 3 channel here based off of 1, 2, 3 pivots. It came down to 4, gave us the divergence on 4. This was the textbook, really a textbook divergence setup. Did it give you enough to really profit from it? Worst case scenario, you're in here. You're screwed. I think you're screwed. You're overextended. You didn't pull the trigger fast enough. Oh, wait a second. You're saved. You did get a little further move up here. But you're up now you're kind of getting out of the range here. And are you going to guess or are you going to take it off? 44. I went to you're in at 45. Went up to 47, almost to 47. You probably could get a point on that trade. Right
the scalper and me would have taken the point and been very happy.
Yeah. At this point, your stop is still effective down here, and as a divergence, look at that thing. Look at the move off of that divergence. That's a pretty impressive move. Eventually, it went up to 47, So it gave you a good 2 points multiple times. You know, I think that would have worked out fine also. And these are, and again, every single situation here, we're giving you the worst case scenario. I'm giving you the worst case scenario of a divergence setup. I'm not giving you, all right, here's the divergence you're getting in right here, right on the divergence candle. That's not being realistic. I'm giving you the worst case scenario. I'm thinking you're going to get in a better setup. Once we see him, you gain the confidence. Once you start to see the setup, you could probably get in half that. So I think, you know, this is the worst case scenario, and you're making profits on all these that we have shown over 2 weeks' time now. Every divergence has given you upside. Every divergence. Next setup. Now, let's continue on. Here we have. This is typically what I like to see divergences in. Is a type of a setup, not that, with a trend.
Time. I gotta ask.
All right.
Okay, you just put a circle up there at
I didn't
the top.
mean to. I didn't mean to. I didn't mean to circle there. That was
okay.
That came out by
right
mistake.
There, scalping based on candles and price action. The moving averages, no indicators. When I'm looking at this setup right here, when your green line crosses your blue, because I have different colors on my EMAs than you do. So when your 20 crosses your 50, I would have had an 8 crossing the 20, and that's when I would have entered because of the way the candles are moving down and the sellers are coming in, which you can see from the tops.
Oh.
Would you concur with that?
I didn't see that. Where are you saying, up here at the top at the 12 o'clock, 12:15?
Up the top where you have the beginning of your line.
Yeah, 12:15.
About 12:15,
all right.
The trend line.
Yeah, I see those candles.
Doing this, being a scalper and doing what I do the way I do it, I would have entered when you're 20. I would have an 8 on here, Johnny.
Yeah.
I would enter on the 8 turning down. And I'd even use Joel's 3 and 8. If I'm scalping, I'm using the 3 and 8. That really, really works well, and it's in the forum. Joel teaches that. So yeah, right there, boy, you could go in there, and if you're a scalper, you're in and out with a point. If you want, if you're not a scalper, if you have patience, which I don't, you could take that thing down and take what, 5 points? That's a beautiful trade. But you have to have patience, and you have to have faith in what you're looking at.
Well, yeah, I mean that's totally something I don't really pay attention to, the continuous candles like that. I mean, let's finish off the week on the divergence setup here. Let's just
sorry for diverging.
Yeah, you diverged on the divergence setup.
I did. I'm sorry.
So you are seeing that the channels are coming in nice and clean here. This was a potential wedge pattern. And with a wedge pattern, like I said, this is always, once we start to identify a wedge pattern or a channel, we are looking for divergences in that time frame. The time frame of on a pattern like this, or that closing rising wedge is at 65 to 75, or you tend to get a feel for it. Anyway, at this point, there is a divergence, just as you would expect on this pattern. Now, we have a high, stage 1. All right, here's your stage 1, and you're going to like this one because it's a sell side divergence. You have stage 1 divergence with a high and a high on the stochastics. All right, stage 2 happens when your price pulls back and your stochastics pull back, but the price spikes to new highs and the stochastics turns back over underneath the 80 and it fails to return to the highs. So boom, we have that, and all of a sudden we're saying, wait a second, look at this. We have new highs coming in, and we also have a trend line above us. And we're starting to turn back over down here. We're starting to put in that lower high, and we're starting to see it happen here. Now, do we happen to see it here and we get in on a great entry at 47, or do you see it now? Do you see it? But, you know, at this point, the price is still hanging at that level. It's giving you plenty of time. So this one actually Go ahead.
Fine, Donnie. 330. You always say watch it.
Yeah, I do say watch it. 330. It's right at the 330 line. You know, that's
that's something to consider.
It is something to consider. It does, it does act sometimes as a more volatile setup. Anyway, the setup was there, just to show you what a negative divergence is, not taking consideration of the time frame, and if that's right on the borderline, that is kind of right on the border of that 330. I think the wedge pattern adds a lot to it, because I always say the best going pattern is a downward wedge pattern divergence buy signal or a rise in wedge divergence sell signal. Now you have two things working for you, and look at that breakdown from that level. I mean, it's obvious to say, hey,
beauty.
It's the one thing I could go back for the last 2 weeks we just did here, or for the last 2 hours, every divergence we went on manually, found them, explained them, and showed you the results of them. All the results have been upside or in the direction of the divergence. Every one that we went over. I mean, and we gave you the worst case scenario. I think we gave us the worst case scenario. Even though the divergences were way down here, we pointed out that we got in way up here, and we still got follow through. So that's how I think how important those divergences are for you. We could go back. We went through it. Go back to the video. This video will go out. Here was the last one. This is on Wednesday. Wednesday night comes around. Here's the morning trade coming up. Still looking at our 9.3, and I'm not even paying attention to the 14.3 here, Sonny. We might have found some other ones. On my charts at the office, I'm looking at the 14.3 too. So here we have a, this is it's a 9:30 open. 9:30 open. Let's see what's going on here. We have right before the 9:30 open that 9:15 low with a low here.
Mm-hmm.
So these things are lined up properly. Then stage 2 is we get a bounce, and we get a bounce back up. Stage 3, a fast takeout of the previous low, and a turn back up. Now I'm starting to see that we're starting to turn back up here. So we're getting that divergence starting to.
So when you say you're seeing turn back up, are you looking at the stochastics or the candles?
The stochastics down here. I'm seeing that Nike check mark. That little, right down here. Before we start to see it, I was saying, all right, this could be a definitely. So I've got my order ready, and this would be a buy signal right here. Now.
Okay, because I look at candles and the wicks and instead of indicators.
So now this is a weird situation, because what happened here, this is key. This is key, and we see this happen sometimes, and it's actually an interesting setup, is where we have a divergence followed by a divergence. We have a buy divergence followed by a sell divergence, and we did get the move on this. We did have this lower low, and we had a nice move, and at that point we powered ahead all the way up to 449. Like, if you would have got in, I said the worst case scenario, probably you got at 48, you got 49. I think you got in earlier on this, 47s. It went up to 49, and then quickly reversed, But that reversal was also a divergence. So we had this high, and this higher high, and this high, and that lower high. So we had a buy side divergence followed by a sell side divergence. And that sell side divergence really just came back down. And that happens, and
Oh yeah.
I wish it happened more, that we could really qualify it, or saying that this is the second divergence out of a 2 divergence setup, where we have one bounce and then another bounce. When I do see this, it happens like this. I say, all right, we have a potential for a bounce as a divergence, and it pops and gives us another divergence and reverses. I would take this second divergence, and if we start to see these things live, just remember that second divergence is usually just as good, if not better, for that reversal. And I like that.
I think so too.
And that's a pure, clean divergence. I mean, that is one that that is perfect. It is a high, a higher high, a lower high, a good angle to it. highs of the session. Everything about it was perfect. So there it is. I mean, that was a perfect
And
divergence.
I didn't see it.
And then, you know, to kick things off here, you know, to give this another shot in the arm. Look at this. They're popping out all over the place today, Sonny. Popping. Look at this.
I see it.
Wait, hold on. I just messed.
Hindsight, Johnny. Hindsight. I'm good at that.
Hold on. Well, I lost my divergences. I gotta fill these up here.
You're getting too excited. Calm down.
All right, here. All right. So that was a divergence after the divergence, and then it broke down here, and we're starting to see another. We're starting to. I think I remember looking at this and feeling and smelling something at this point. I said, "Oh, this seems to be holding. Let's see if something sets up here," and then boom, we smack down real fast. So all of a sudden we have what we call this. It's almost a running divergence with that final divergence being capped off, and then yes, there is definitely a low here. We'll call this that low. This was part of that process. It was a low down here, and then we popped back up, and then we slammed down, and we took out the recent low. So we had a series of lower lows, and this low represents this cross back up. And we have that divergence. We have this higher low being put in here. So lower low, higher low. This point here, worst case scenario, at this point, we're way out of our league. We get in here, 24, 45, 40 and a half, let's call it. And that looks okay. I don't, you know, let's see what happens. And I'm not saying I'm doing this because I want to, you know, I want to find one that breaks down and see why it broke down. And if they don't break down, you know, I think that's really important for anybody out there watching the setups here. So here we go, and we did get that follow through. I mean, for a scalper like yourself, you're looking at you know, a point or sometimes even a less. This now we're in at 40 and a half. It's already up at 42, 43. It's at 43. Boom! It's at 46. I mean, talk about divergence. Look at this divergence. Look at the results off of this. Look at the divergence. Look at the results off of that. Go back to the last 2 weeks. Every friggin' setup. Boom. What did we just see here, Sonny?
Yeah.
Look at this.
I see it now.
You're starting to see these. They're going to start popping on you. Here we have a high and a higher high. Here we have the high starting to turn over. Starting to turn over. Oh, it turned over. Now we have a lower low. We have a possible sell side divergence here. Now, if anything that I don't like is this market here, the strength of this market has been very, very strong. And you know, and the news can blow things out of place. Now this is a divergence. Good one. Let's see what happens with it. Yeah.
That's a major understatement, Johnny.
So worst case scenario, and the squares we use as a shorts. Worst case scenario, we're in on a short here. We're here. And I wouldn't even get in there. You know, the reason I wouldn't is because it's already oversold, and we're probably going to get a bounce back up before it does head back up. But just to kind of give this the same type of treatment we've given everything, you place your stop above the previous divergence high. Also want to take a look at that 5-minute time frame, maybe. Just for the hell of it, it's an interesting 5 minute. 5 minutes kind of extended here. It's kind of overbought, so we might, you know, you might actually have a turnover on the 5. So I'd probably be a reason to also press this if it starts going in your direction. But right now, the 1 minute is you're a little concerned for a bounce. Maybe a bounce here because of the 1 minute time frame. There's your 1 minute bounce. But then you're starting to see this kind of coil back down. The overall divergence is there, and then boom, the divergence is taken over. Oh, I mean, can you give me a loss? So where
I took mine yesterday. That's for sure. I got chopped yesterday morning. I was fighting it because I wanted to hurry up and make some money and get out of here because I had a day trip
here's a
planned.
sell side divergence with your worst case scenario entry is at 24.47, 44, and And what we see here is a big drop off. That divergence now predicted another big move. Every big move has been preceded by divergence.
I see that now,
Yeah.
after the fact.
So, when some people come in and say, well, why do you trade divergences? This is exactly, we can go back and point out every single move that happens, and then develop that type of confidence behind your trade, because that divergence led for this big move, this divergence led to this big move, this divergence led to this big move. And we, and we could now go back on this trade and look at every divergence here. This divergence led to this big move. We could go back. How many do we pull out today? This divergence right here. This divergence. This divergence led to this big move, even though we decided to take it halfway up the move, just to give you the benefit of the doubt of getting into the bad fills. But the overall divergences have given you great. Here's a divergence, and it's given you that big move. And I've outlined all of them on the chart, so we could actually go back and see. And then this is Friday, so that was the last move. And I have to say, that's a clean sweep right there.
Yeah, it's been great. It's been a good week, really. There's been a lot of volatility.
This is the Friday. Well, going into Friday now. No, we did Thursday, right? Didn't we do that? I don't even know where.
Yeah, we did Thursday.
Yeah, that's the Thursday we just did. So that's the one we just.
Yeah,
these are
beautiful
Friday divergences. 11:30 broke down, and then we're just continuing to look at other setups here. Am I looking at anything? Am I seeing anything? There is volatility here. I mean, yeah, if you have a different way of trading this, like you could, say, why don't you trade from 41 down to 38? And then 38 back up. People, that's famous for a trader. Why don't you just get in here and take it off here, and then get back in and take it off here, and then take it off here, and then take it off here? Well, you could follow the you could follow the stochastics like that in some cases. You have to find that rhythm. I mean, that is what some people do. But I think after a while, you'll start losing it. You'll start losing that edge. The divergences, I think, give you the better edge, and they're more organized. It's more safe.
Yeah.
Proven. We've really structured a methodology behind it. This is Friday. So here's Friday morning. Paul and myself are on the air. We have a early morning pop in the morning here, 9:30. Market opens up. Very interesting action this morning. Look at this, just chopping, and it took off. It was a slight divergence here too. I mean, very weird action. And then eventually popped. I don't know if that was even a valid good setup there. This over here, I believe, was the 5-minute setup that we were looking at, because it was a 1-minute setup here, but it rotated up a little. Didn't give us much. This was one that actually came down and gave us that running divergence, because this was more of that 3-minute time frame. So this is what was good about this one. This one was a clear 3-minute divergence. So we had that low and a lower low, the high and the higher low on a 3-minute. And I think with the 3-minute, you're going to get that bigger move. On the 1-minute, and again, on occasions, you will get this 1-minute conversion to a 3-minute, where that 1-minute, you don't get that follow through, but you have a quick move, and it still stays within a different time frame divergence. And then a slow grind all the way up. It wasn't the best setup in the world. I mean, it would have worked on the 3-minute, but it would have dragged, I think, this whole day was. It was kind of weird. We had some news out at the end of the day. There was one setup. I actually took that one. I think I took this setup today. I took one setup today. Oh, a diversion. That was it. That was only divergence we could actually spot. This looks a fast little move to the highs. I'm just curious to see if that was a 5-minute sell signal right here. And look at that. It was. So if you went to your 5-minute time frame right here, you'll see that it did qualify. We had a high. We had a high here combined with that high here, and then a pullback, and the price dropped under that 80 line, and then a spike higher. But we didn't adjust with the stochastics. We actually turned lower, so we had that lower high and a higher high, and that was a very nice 5-minute time frame divergence. One that probably is a textbook one and should have been taken. So here we had that. You didn't see it on the 1 minute, but you saw it on the 5-minute, and there's the results from that, right into the close. You know, a clean sweep, basically on the divergences.
Wow.
Harish Kumar, the mean price should be above the 200 EMA and a directional stochastic divergence, right? When I'm talking about, you know, we have different techniques with the moving averages. But so what you're using, your mean price should be below or above the EMA. The best thing I could say is when the price is trading above that 200 period moving average, it's usually you know, definitely an uptrending trend, and it's, you know, what I'm paying attention to more of that, where that price level is just where it is in relationship to a pattern that comes along with the stochastics. I think the pattern recognition is important, and it doesn't have to line up exactly. It doesn't have to be that textbook perfect everything is, but you have to understand directional side of things. So you have a directional pattern. You could tighten it up if you want. You could put out some candlesticks, but you understand there's kind of a range here. You know, up here, you're chopping around. It's back up to the trend line. It's back up to the trend line. And there's usually one side of a channel that's really intact. And when you get a setup and you have a divergence and a underlying channel line, which we call an indicator, you know, there's 5 indicators we're paying attention to. Stochastics, our base, our foundation indicator, stochastics. Then we have moving averages, support and resistance, recognizable patterns, and reversal candlesticks. The recognizable patterns and trend line, well, I call it trend lines, trend lines. Trend lines and patterns are different, you know. This qualifies as a trend line attempt. It also has a previous high, which this area right here is an area of support and resistance. When we say how does your support and resistance add, or how does it play into an HPS setup? Well, just like anything else, if the price hits a spot and there's another indicator that lines up exactly, so we have maybe a rising trend line, a previous high, which is known to be an area of resistance usually, and a divergence. That's 3 things already in our area that we want. So we know that this is becoming a very good short zone. We have a divergence, we have a trend line, we have a recognizable channel. We don't have much. We probably even have a reversal candle there. If you want to concentrate on it, a little candle there. Yeah, they do fail. You know, there is going to be those times, and when they fail, but it's very rare. I mean, it's rare that the stochastics fail without an underlying reason. You know, usually the failure comes because there's something out there in the market that shakes the market and breaks down things. In some cases, there's programs, program trading that will trigger at certain levels that will sometimes break a pattern. But you know, I haven't seen that in a while. I saw that more in the beginning of summer. There was some patterns, some program trading, buy programs and sell programs that would spike the market or drop the market. And you know, when you're in the divergence area and you get one of those programs, you could probably break down. But the majority of the time, 90% of the time, you have a divergence. You better be paying attention to it. It's easy enough, you know. And again, it comes with the market experience to realize there's not a holy grail of trading, But this is the closest thing there is to a holy grail of trading. Just being a little more conscious of what's going on in the market around you, understanding not to trade against a strong trend. That's when divergences don't work. So when there's something underlying and pushing this market really strong and you're extremely either bearish or bullish on your trend, to try to go against that trend, that's when you're going to get hurt. The best time frame, divergences work on great on all time frames. For our short-term traders, the scalpers, I like the 1, the 3, and the 5 minute time frame. I think that's, you know, I used to concentrate on a 1 and the 5. Rob has brought, you know, light to the 3 minute. I enjoy that one a lot. It's kind of the hybrid. So I enjoy that hybrid 3 minute. So you could become an expert on any of them.
Johnny?
Yeah.
Question.
Sure.
Would you say that when you're trading that stick to one time frame to make your entries and exits, but yet watch the other time frames?
Yeah, because you don't want to miss out on a big move. I mean, if we go back here at 11 o'clock, 11:30, let's take a look at this. This is the 1 minute time frame. Right? Now we see from 11 o'clock it's really moved up. So when we get a nice divergence on the 1:11, you know, at that time frame, let's go to the 5 minute. We're probably just getting oversold and starting to rotate back up. So if you have that 5, now we're in a 5 minute, and you can see that rotation is actually starting to move back up, and it has a much better move when you have the 5 minute on your side.
That's a lot less choppy too.
And when you're the same thing, when you have a 5 minute sell side divergence and you're pushing down the 5 minute, you have that rotation down. I mean, it's obvious that you bring up anything, you know, normally you're looking at the price and stochastics working together. The divergence happens when there's something's changing. You know, there's a change that in the normal way of the market or whatever you're following. There's a change. That's the divergence. That's how we identify it. We're actually starting to see that divergence because of the formula identifies there's a change in that internally by comparing the candlesticks to the previous candlesticks. And we can actually see the momentum is shifting, even though we're not seeing it on the price yet, but we see the momentum is shifted. That's why this is kind of a proactive. I mean, if you could actually start to gauge, hey, this is starting to twitch down, this is pushing higher, let me go short here. Yeah, that's great. That's the 5 minutes, the 1 minute. I think next week, Sonny, you want to even remind me? I know you're always good at doing that. Is that I think I want to put the I want to make a 3 minute time frame and put 2 charts up there, the 3 minute and the 5 minute on the ES, just to follow. Because I think instead of doing the 5, we'll do the 3, and we're going to follow more so we don't miss the bigger time frames. And it'll be easier to set. I don't know why I don't do that. You know, I just put that big 1 minute like we're looking at right now because look at them. Look at the setups. I mean, someone might say in the chat room, well, you want to discuss when they fail? Yeah, well, I just went over 2 weeks of charts with you. 2 weeks of charts. Step by step, tick by tick. It took the last 3 hours, 4 hours. Tick by tick going over these. None of them failed. I think maybe the last, this one here turned into a 3 minute divergence. That's the closest thing of a failure we were seeing here. And that was a nice move up. That everything was.
So you say you want to go from a 1 minute to a 3 minute?
Yeah.
And have a 1, 3, and 5?
Yeah, I want to have the 1 minute and the 3 minute up on the show during the show.
Okay.
Yeah, I want to just set up the 1 minute time frame and the 3 minute. You know, I don't want to make it big enough so we see. Like right now, you see a nice vision of the 1 minute chart. If I put 2 charts up there, both of them are going to be smaller to take up the space, so you might not be able to see them as good. Is there any tools that can be used? Question coming in. Any tools that can be used to give us alerts on divergences? Yes, there is. Let me show.
It's called the what is that now, Johnny?
The Rambot.
Oh yeah.
The Rambot is a divergence identifier. It's on our platform.
But you have to be a member to see the Rambot.
Yeah, I want to show it to you right now. I want to show the people out there. And again, we broadcast every single day the markets. I'm doing a special overnight show right now, Friday. Not a, you know, we're doing something that is pretty cool. So we're really
Your kidless don't have to get up in the morning.
I know, and I'm still recording for the HPS watch list. This is all part of the HPS watch list. So I'm still going to send it. It's going on 2 hours. They're going to hate me. But you know, the information. 2 hours. They're going to hate me. Well, but you know, the information. The information is so valuable tonight that I wanted to record it and just send it out to the members. So again,
Johnny, what you've done right now, the past few hours, is absolutely what you do the best.
Felt good about it.
Teaching.
Yeah.
And the enthusiasm in your voice is just really awesome. Thank you.
Oh, thanks, Sonny. The let me point out. Let me show the people something here. Let me see, where are we here? Just give me a
Rambot.
Yeah, I want to show you the Rambot. Let me go to my source. Add. So I want to capture our dashboard as a member. Day trading radio is what we're doing. Is you might be watching this on YouTube. You can watch this every single day. Look at Razor Brands on the screen. I don't know why. Let me fix this. All right, here's our dashboard. Oh boy, I have to pause it or else it's going to get crazy like that. All right, so you're seeing the dashboard. The dashboard is, if you're a member of Day Trading Radio, it's a monthly fee. You get the dashboard, you get all the alerts, you get basically full coverage, commercial-free coverage of the markets and our trading. This is the Rambot. The Rambot down here on the dashboard is this section right on the bottom, and you have 1 minute, 3 minute, and 5 minute divergence signals. You could adjust them any way you want. So when they pop up, you could say, I just want 3 minute divergences. Or buy side divergence. So here, it'll come up and give you all the divergences that are happening during the day, or any of them. And they have an audio alert. There's an audio alert to them. There's sell side. Refresh them. We also have the tradeometer, which is a standalone indicator, which is also an HPS indicator. That's even, we didn't even get into that. Just go to tradeometer.com if you want to read more on that. All the audio channels. We have our live news squawk, where we have live news squawk. Our music channel. We're always playing music. I think there's music playing. I don't know if I started it or not. I did start it for you. Someone asked. Sonny asked for it. I don't hear it though. Our main channels up here. We have on the top the HPS watch list, which goes out every Friday, which does education, and it outlines all the divergences. So if you go to the HPS watch list, you'll see that list of stocks that are over time listed as divergence setups. Most of them are divergence setups, and these are all automated. Every chart has a video that goes along with it. A setup that goes along with it, and the video kind of outlines why we're looking at a certain setup. So that's and it gives us, and it's mostly divergences. I'll explain in the video what the divergence is, and then you could actually follow along on the trade as it updates and stuff. This is an old one that's popped out of there. Anyway, there is. So we have all those. What else was I going to show here? I think that's it. Oh, that's the dashboard. That's the Rambot. Someone asked about divergences. We have our forum, and the forum is just all our trader commentary, lots of videos, education stuff, discussions, all special shows. These late night shows are going on there. Trader spotlights. We interview with traders. All trader tech shows, option shows, futures shows, Just tons of information. And then there's a lot more on the site here. My trades, any trades I'm taking, any HPS trades, the news channel, the music channel, and then so much more. So, Sonny, I think it is. I think it's time.
I think it is, Johnny. This has been absolutely awesome.
Thanks. I wouldn't have done it without you.
Well, you know, I just had to butt in and ask questions.
Good job. Chased Anthony off of here.
Put tape on my mouth, Johnny.
All right.
You take care. Thanks again for the awesome lesson. I hope we didn't bore anybody.
No, it was good stuff. Good stuff.
It was good stuff. It's absolutely excellent stuff. And I really appreciate you taking time to go through this step by step with me, because I just really wasn't getting it.
Yeah.
And I hope everybody appreciates it. And again, I apologize to the members because I kind of took over the show.
Yeah, you did.
Which is why I wanted to stop Anthony from doing it.
Yeah. All right. Well,
I want to hear you.
All right. Good night.
And I thank you. Good night.
All right. Good night.
Good night.
See you Monday.
Yep, you will.
Yep. Anyway, you can just get the Rambot. Yeah, the RAM is exclusive to the platform. That's one of the special things that we've developed over time. It goes out. The membership's $49 a month. It's very cheap. You could try out a trial, check it out. The outside of the site has the historical portfolios. So you have all the trades, what the percentages of the trades are and stuff. It's on the right-hand side of Day Trading Radio, so scroll down. Since Brian left, Brian set it up. It hasn't been updated. I need to update it. But there's about 4 or 5 years of trading. It's all based off the same methodology. I would say that my trading, everything's posted. All the HPS sites, all the HPS setups are automated and posted, as you could see. And I think that's it. So you know what? You could always listen in, learn much as much as you can. We all started as beginners. There's a big learning curve in trading. I appreciate teaching it. I love it. That's a passion of mine. I learned it in '92. Started trading full time in '96, and from that point on, developed over time, things that work, and then kind of put yourself in a position where you develop that patience and discipline to understand that certain things are high. We keep on talking about high probability, but that's a great term for it. It is what it is. The best analogy for trading is gambling. It really is. And poker, you can have the best hand and still have a bad beat. That's what divergences are like. You wait for your hand, you wait for your pitch. That's what anything great. If you're great in anything, it's because you've studied it a long time, you practiced it a long time. Anything, you talk about athletes, you talk about gamblers, you talk about people who fish, you talk about anything, boxers. There is a method to all the great ones because they do it the right way. They have limited, excessive energy that they're wasting. There is mechanics behind most things. And find something that you're passionate about and that you're great at, and compare it to trading, and say, all right, Johnny, I like golf. Yeah, you'll probably find a lot of analogies with golf. You have the right club, you have the right setup. I don't know. I'm not a big golfer, but gambling is that certain, especially if you go on the blackjack table, and from the rule book that the odds are in the favor of certain hands. If the dealer has a 5 or a 6, that's considered a bust hand. And if you have a certain hand that maybe you should double down because the odds are that that's going to give you a better, you have better odds of winning. So that's playing by the book. And the book has been by professional traders who do this as a limit because they want the odds in their favor. You want the odds in your favor when you're taking a trade. There's nothing guaranteed. You don't know when news is coming out. You really don't know. Algorithms are controlling the markets. There's program selling, program buying. What we could do is just follow the path that the chart has given us. That's our trail. We're reading the land. And we've been doing it for so long that we know what signals lead to where. You know why the market is giving us a pullback and a flag, and we know why divergence, and that moves higher. The the weakness of the method is the trader, believe it or not. It's the lack of consistent taking of the trades, the hesitation behind it, getting in too late, or being chopped up, or trading without enough capital. There's a lot of other things, and little things that add to becoming a great trader. It's being comfortable and confident in your trade, trading with enough capital that you're not worried about every single trade that's paying the bills. Having patience to let the trades work out, because lots of people need to make that money, yet they're not willing to wait for the perfect setup. When that perfect setup comes around, that's when you bet. I've seen people sit at a poker table, fold until they have the goods, and then they start betting. Boxing, big boxing match tomorrow. There's a sweet science behind that. That's why they call it the sweet science. There's a direct understanding between angles and what's the proper technique. Because if there was another technique, they would be doing it. But right now, a jab is a jab, and these things that they do has been honed over years. Baseball players, waiting for their pitch. You're not swinging at any pitch. You're trained to hit a ball that's over the plate. So why not be a stock market to wait for that pitch to come to you and it's over your plate? You know what you're looking for. Then you take your swing. The algos to take the weak human experience. It is probably the next thing on the list. We've traded with algorithms before. We traded with bots a lot before. We've had many bots, and many people bring their bots on this show and trade with them. It's still, you still have to turn the bot on and turn it off, and be, it's still a difficult thing. Nothing that I've built myself other than the RAM bot and the tradeometer. And I could tell you right now, we have a guy on the site, Sawboy, who uses the tradeometer exclusively, and just it's unbelievable with it, and posts all those trades and stuff, and he runs it like a business, which is great, and then we have, of course, everyone, I think, sees the magic of the divergence, so that's not an issue. So we all always using a kind of a group effort to identify these and explain what we're looking for, because it is something that, as you could see here, you don't want to miss. You don't have to take them all, but you at least want to be identified. That's what I do. I identify divergences. I try to give you the best parts of the market to trade. Can't push the button for you, but I can push the button for myself. We could show you the setups. And statistical advantages. A lot of people have great arguments against it too. They say, well, everything's random. It is random. But hey, tonight is a great example, because we could go back to all these patterns and show you this pattern and what caused that pattern and what led to this move and what led to this move. That was the divergence. That was a divergence. That was a divergence. There's no discounting it. There's no saying, hey, what I should do is just not even tell anybody, just trade them, go hibernate in the seller, and who gives a shit, right? What's this divergence doing here? Why is it so obvious? What's that doing there? What's these channels doing there? There's a lot of years of experience in realizing what works and what doesn't work in the market. Yeah, there's probably a lot of other opportunities to trade. Maybe someone's trading the MACD, someone's trading the RSI, someone's doing volume profile, someone's doing Fibonacci's. I have my setups. I could back them up. You know, if you could back up yours, back them up. Show me. Make me a believer. I'll change. You know, but that's the key is seeing it work the majority of the time, having the confidence to take it, having the patience to wait for it. That's the system. That's it. I'm done. I'll see everyone Monday. Monday we'll be doing the show live, Day Trading Radio. I'll probably try to do another YouTube thing. I've been testing the YouTube channels out, doing the Facebook thing. But everyone else, if you're out there, definitely stop by Day Trading Radio if you want to watch the show. The show's on. It's always free. You have commercials on the outside. No commercials on the inside. As a member, you don't get the dashboard, but you do get my beautiful voice. So I'll see you either way Monday. May the trade be with you. Good night, everyone.